Looking for a protein shake that tastes as good as it performs? Meet Rockin' Protein Max. Packed with 50 grams of fuel, it'll help you keep up when your day won't slow down. And because it's always creamy and never chalky, every sip tastes great. Even better, it's lactose-free and has 0 added sugar. It's not every day you find a protein shake you actually want to finish. Catch Rockin' Protein in the dairy cooler at a store near you. Rockin' Protein and Shamrock Farms are registered trademarks of Shamrock Foods Company.
Welcome to Markets Radar with Jeremy Quintanilla, where I break down the top stories moving the markets, stocks, bonds, crypto, and everything in between, and give you my take on what it all means. Let's dive in. This episode of Markets Radar is being recorded on June 6, 2026. These news articles or the news may have changed by the time that you hear it. All right, we're coming off of a hard week of sell-offs, especially in the crypto marketplace. Essentially, Bitcoin's wiped out all of its gains since President Trump became president back in, 2024? We're only 2 years into this hellhole, but I won't comment on that. But essentially, all of those gains have been wiped out. I got into an argument with someone on social media about what it would take for Bitcoin to go even lower, down to where it even started at 7,000. And when I say started this run up, it was somewhere around $7,000. Run up, I mean, from years and years and years ago, back before crypto became even a mainstream hit. And they were asking me what could have to take place for it to do that. And I made a joke. Well, it's lost out everything that it's made since Trump became president. So keep Trump in the office and we'll see what can go from there. But I was just joking around. But this has been a pretty rough sell-off. Again, S&P 500 right now is down 2.64% or 264 basis points. Nasdaq is down 4 basis points or 4.18%. The U.S. 10 years down 0.46%. Crude oil is down 0.46%. So I guess that, or 2.69%. So that might be, I guess, maybe a benefit. Gold is down 3.10%. And the pound to dollar is down 0.61%. So we're coming off of a pretty fun week. Now I have my own sentiments on why that might be, which we'll talk about a little bit later. But the first thing that I want to jump in today is this SpaceX IPO. I do my trading with Charles Schwab, and I was able to get in to request some of the IPO shares through their trading platform, not Thinkorswim, but their traditional trading platform. And I requested, I think it was, I said on the New Wealth Transfer podcast, I think, or where did I mention it? I don't know. I'm going to drop $5,000 into it if they'll let me do it, is essentially what I'm doing. I'm not like a whale over here putting millions of dollars into it. My sentiment is that it's coming in overpriced. It's coming in, what they're saying is $135 a share. I think that's ridiculously overpriced. I think it's going to go up. I'll probably sell it and then buy more back when everything crashes, because this company is good, except for the fact that there is a long-term innovation strategy that I do believe that it can get to. But right now, I think their artificial intelligence, bundling everything in with XAI, has kind of made it a little bit difficult for it to show its profitability, because that thing is just hemorrhaging their revenue or their money. But the 2026 SEC Form S1 registration statement, that's the form that has to be filed when they're going to do the proposed initial public offering of the Class A common stock for Space Exploration Technology Corp. I went through it. It's commonly known. So Space Exploration Technology Corp is SpaceX. And so the document details the company's recent mergers with XAI and X Holdings, along with everything else that needs to go into the consolidation of the space launch, the satellite connectivity, and the artificial intelligence. And it's going to turn it into a single integrated entity. Again, this is going to be under the leadership of Elon Musk. The company seeks to leverage its dominant market share in mass to orbit and its expanding Starlink network to build orbital AI compute infrastructure. And so let's go deep dive into that, and I'll kind of give you my thoughts. The thing that I think is funny about it is if you go and look at the S1, literally the whole, I don't know, there's 15 pages just pictures of fucking rockets. I don't know why that is. I don't know what the relevance of that is. It feels like the document is the way that they put the document together was to make you feel a certain way about the innovation, the ability to become a multiplanetary species, right? And so I think that was designed to give you a certain feel about it, so you feel good about it and what we're trying to accomplish, that it's for the world. But I thought that it was completely unnecessary. So if we look at this from a revenue perspective, from the financial performance, SpaceX generated $18.67 billion in consolidated revenue in 2025, representing a 33.2% increase from $14 billion in 2024. And it showed significant growth from $10 billion in 2023. So for the first quarter of 2026, the company reported $4.69 billion in revenue. So again, there is revenue growth. However, there's not much profitability in the company. So the company reported a net loss of $4.93 billion in 2025, and then a net loss already this year of $4.27 billion. Now, I do want to make a point that despite the net losses, the company did generate stronger positive adjusted EBITDA of $6 billion in 2025 and $1.12 billion in Q1 of 2026, demonstrating that the scale and the operating leverage of its vertical integrated model. Because again, a lot of this is showing like the piece of how all of this is going to work out and why AI has kind of been put inside of SpaceX. Now, the biggest revenue driver is the Starlink, which is one inside of the S1. Elon Musk has a quote in there thanking the public for purchasing Starlink, because that's actually been what's able to make all of this popular. Because again, putting rockets into space, that has usually traditionally a government contracted thing, or if companies are trying to get something into space such as satellites, they could probably do it through the rockets as well. But again, the biggest segment is Starlink. It generated $11.38 billion in revenue, up 49% year over year, which is amazing. And then the second biggest revenue driver, which is the space launch, the space segment generated $4 billion in revenue in 2025. So again, AI or XAI, which is the newly acquired AI segment. Now it did generate money, $3.2 billion in revenue in 2025. However, it did have a $2.46 billion operating loss in Q1 of 2026. There's also capital expenditures that are really, really massive in this company, obviously, because it has to do with space equipment. So I don't think that that's really that unthinkable. Okay, so again, I think that what they're asking for the cap of 61 times forward their sales. So SpaceX is targeting a valuation of roughly 7.75 or $2 trillion based on a projected 2026 revenue of 28.5 billion. That implies a forward price to sales multiplier of 61 times. Okay. And if we look at some of the other companies that are out there, Tesla was really a much lower. Palantir has approximately PS multiple of 67 times trailing sales. Again, so if we look at this, it doesn't look like it's being valued, in my opinion. It's being valued way too high. It should be valued more, maybe 1 trillion, probably in the higher hundreds of billions of dollars would make much more sense. If we look at this from a comparison point of view of, like, say, Meta, it was a 28 times price to sales. If we look at Microsoft, it was a 4 to 5 price times price to sales. Again, it's also going to be based off of what the revenue near the IPO was. Meta was at 3.71 billion. Google was at 3.19 billion. But again, that was in 2011 and 2004 respectively, and 1985 for Microsoft at 4 to 5x price to sales. So again, I think that if we take those revenue numbers into consideration, convert them into today's dollars of it projecting 28.6 billion, 28.5, I think that the price to sale is much too high, especially if it's at 61 times. And if we look at Meta and Google, two of the largest companies, especially Google, one of the largest companies, Google was only 7x, Meta was 28x. And again, I think that we're not taking into consideration with this IPO that these numbers are going to be very, very difficult. There's not, other than Starlink and X, depending on how they do it, that these aren't consumer focused It's not a consumers focused business. It's literally a business designed, in my opinion, to make Elon Musk wealthier. Of course, that's fine. That's capitalism, I suppose. But it's also designed for it to be a company that's going to help get us to becoming closer to the singularity, I imagine, and then closer to being a multi-planetary species. And the reason why it's probably going to work out in the long run is because there are a bunch of people that love Elon Musk. There's a bunch of Elon Musk fanboys out there that are, when I say fanboys, I don't mean just children or college students. I'm talking about like heavy hitting investors that believe in him, so that they're going to make sure that this happens and help make sure that this happens. And so, and then again, going public, there's a lot of people in the public that are big Elon Musk fanboys that, love everything that he does. So they're going to make it happen as well. My problem with it is that I think out the gate, I think it's just priced too high. I think over the long run, SpaceX is going to be one of the most important companies. And I think that what they're trying to do from a forward-thinking standpoint and getting us into more of a space economy, that's something that I love and that I have a passion for. So of course I'm for that specifically, and I think that's fine. The other problem is that he bundled up all the shit inside of it, right? I think there's a point in the S1 where it talks about how Tesla had a bunch of Cybertrucks that were had like recalls on them, and so SpaceX ended up buying those. Now maybe that was to break them down and use them for parts. I don't know, but again, we're essentially, this company's valuation is kind of created based off of our notion that this guy, one guy, is going to get that one guy is a genius, and that nothing that he can do can fail. And I think that that's not 100% the case, but I do think that in the long run, this is going to be a great company. We also have the situation, if we look at they're also focusing on the Terafab chip manufacturing, which is something that I think also is super important in this, and why I believe in the long run this is beneficial. So the goal of the Terafab chip manufacturing initiative, it's a collaboration with Tesla and Intel, and again, Intel is owned 10% by the United States. It's to vertically integrate the design, fabrication, and deployment of advanced logic and memory chips. So this initiative's ultimate long-term objective is to become the world's largest chip manufacturing facility, which I think is super important as it relates to China's situation with Taiwan, and it relates to making the United States a manufacturing. If we're going to become a manufacturing country again, and everybody's all, we need to do manufacturing, we need to build something, the thing that we should effing build are going to be freaking chips. That's what we should be doing, and this needs to make sure that these goes to American jobs, which I don't know if it references that completely in the S1. And again, this is part of their ability to integrate all of these things into AI and into space. So the Terafabs target several strategic goals. It's to alleviate future AI chip shortages, reduce costs and optimize the performance, and design specialized chips. So this, I think, is super, super important. And again, the partnership is with Intel. And again, I'm not going to say, but there's a lot of people. Ken Griffiths went on something the other day saying how there's no crony capitalism in the United States anymore. And this is the croniest of capitalism, well, partially the croniest of capitalism that I've seen in the United States in a really, really long time. Right. So if we think about the importance of the Terafab chip making, we need to control the physical stack. So SpaceX believes that the future of AI will be determined by who controls the physical constraints of growth with chip manufacturing, which I agree with that. Alleviating supply shortages to enable massive scale. So the ultimate goal of Terafab is to become the world's largest chip manufacturing facility, producing 1 terawatt of compute hardware annually, and rapid innovation and cost reduction. So by conducting activities end to end, from designing the lithography mask to fabricating logic and memory chips and advanced packaging within a single closed-loop plant, SpaceX hopefully can rapidly test and iterate its designs. This approach aims to significantly reduce overall compute costs and optimize performance. And then environment-specific optimization. So building chips internally allows SpaceX and Tesla to design processors optimized for their specific and extreme use cases. And so this is not only for SpaceX, but also for Tesla, which again, you're essentially in this IPO, you're essentially eventually going to get probably all of Elon Musk companies put into this, the good ones and the bad ones. And the problem is, in my opinion, the best one is SpaceX and to some extent Tesla. But Tesla's been all over the place. They haven't had a good car in forever. The Cybertruck's a piece of shit. Even though I personally like the way it looks, even though everybody thinks I'm crazy, I think it's a cool Cybertruck car. But in the long run, it's not going to become a mass market consumer vehicle. He promises semi trucks. He's promises driving vehicles. Waymo's destroying the driving space. His XAI is garbage. If you look at the other AI models, in fact, they just did a deal with Google for I think like $200 billion. And I think it's a $290 million a month for computing power from XAI's data centers. This is going to start in October of 2026, and it's going to run through June of 2029. The agreement gives Google access to roughly 110,000 NVIDIA GPUs plus CPUs and memory. Over the full term, it will work out to a roughly $30 billion deal. And the problem with compute right now is, I guess, the thought process. I mean, there's economies of scale thought process here that the larger and more need that these go, that the prices will drive themselves down. But right now, that's specifically not the case. In fact, the price of tokens for enterprise tokens is getting so high that some companies are making the assessment that it's getting too expensive to have AI. They might as well just hire workers, right? And so again, not a lot of people are thinking, and I think some of that is because a lot of companies are just going into AI because it's the biggest fucking thing on the planet right now, and everybody's doing it, and no one's taking into account how they're actually utilizing it for its specifically efficiency and having a process in place to use it. The other problem with this thing that I'm confused about is why Google, which runs its own massive data center network, is renting capacity. And so when I thought about that, I was like, well, why is this happening? The answer is demand. So Google said that the deal was driven by unexpectedly high demand for Gemini Enterprise, which is what I was going back to a second ago, its agent platform for business users, and described it as a short-term arrangement to provide bridge capacity while it builds more of its own. So essentially, it's renting its own space from XAI, right? But that revenue is eventually going to go away because Google's building its own ability. It's building its own data centers to specifically do this. So while that $290 million a month is showing up as part of the $26 billion to help put the valuation of SpaceX out there, it's not going to be there long term. And that's something to think about as you're going into investing in SpaceX, or at least not the deal with Google is going to be long term. But moving on from SpaceX, that's everything that I understand about the IPOs of right now. And full transparency, I'm purchasing 40 shares, or trying to purchase 40 shares of it. It's only $5,000 of SpaceX IPO. But again, my plan, this is free advice. My plan is I'm going to watch it ride up, probably dump it because it's probably going to be volatile eventually, or at least maybe sell half of it and see if I can buy in later, or maybe I'll be a schmuck and buy in at a higher when it's higher. Who knows? We'll see what happens.
We are MMS Inspirational. We are a faith-based, music-focused podcasts created by producer Ronald Tyke Oliver. MMS Inspirational Podcast is the place to be inspired, encouraged, meditate, unwind, relax, reflect, and enjoy the goodness of God's Word and positive messages through amazing music. Listen to us on Apple, Spotify, and Amazon. Check out MMS Inspirational and be blessed.
We've been made endure for a night, but joy comes in.
The other thing before I move on, I want to mention about SpaceX is it's been denied fast-track access to the S&P 500, which is different than what Nasdaq is allowing it to do for its Nasdaq 100, I believe. So they are sticking to their guns on their 12-month waiting period to see how the company does before they add it to the S&P. But my guess is it will eventually be added to the S&P 500. Let's Let's get into this fun little Bitcoin sell-off. What's going on in these crypto markets? Combined market value of fully diluted Bitcoin treasury company stocks has fallen to about 72 billion from nearly 134 billion at its most recent peak. Companies that once promised investors leverage exposure to a perpetual crypto bull market are increasingly focused on survival right now, conducting reverse stock splits and selling portions of the crypto assets they once pledged to accumulate indefinitely. And that's going to be kind of like a Michael Saylor hit right there. The digital assets treasury companies are faced with a stark choice: default on their debt or sell assets, as the forced selling has shattered the perception that they would monotonically act as permanent buy and hold investors. And this is specifically in regards to Michael Saylor selling off $2.5 million of Bitcoin. And this is his first sale since May of 2022. Since it took place this last week, May 26th and May 31st, marking the first sale since 2022. And so what's going on with that, especially since Michael Saylor said that he would never sell his Bitcoin? Well, he has a bunch of dividends. There's two thoughts on this. We talked about this on the New Wealth Transfer podcast. The thoughts are, one, that he needed to prove to the creditors that he was willing to liquidate the Bitcoin to meet credit responsibility so that they could keep the valuation of strategy at what it needed to be, because they were looking at not considering his Bitcoin that were on the books part of the valuation strategy because of the fact that he would never sell it. So there's a thought process out there that he was doing that so that it could show that he was willing to liquidate that Bitcoin if needed. But there's also what they had said that why they did it is because they needed to make dividend payments for their preferred stretch, STRC, stocker symbol, which pays out guaranteed dividends, not guaranteed, a regular stream of dividends for the preferred stockholders for stretch. And so again, I don't think that this is something that this is the reason why this specifically happened. If people are using that as the mechanism for that, this is not a sell of Bitcoin because Michael Saylor doesn't believe in Bitcoin. This is a sale of Bitcoin because he needed to do it to meet the requirements that he needed to meet for the things that he promised to investors, which was nothing wrong with that. And again, I don't think it's wrong if he did decide to change his mind and sell his Bitcoin to meet specific demands or for whatever reason, because new information happens. That's why people shouldn't make outrageous claims that they're never going to do something, because you never know what you are going to do or what could happen. I could say that I could never kill someone. Someone could break through my front door, try to harm a beautiful wife or a beautiful Maria, and then and that I could kill that person, right? There's things that happen in the world where we change what we say. That's why we shouldn't talk in absolutes, because anything is specifically possible. But the crypto market kind of Bitcoin slide. So the crypto market started with Bitcoin slide after adding fresh pressure to one of the most ambitious financial experiments to emerge from the recent crypto boom. Publicly traded companies created to accumulate digital assets on behalf of investors. They started selling their Bitcoin, and the old thing came crumbling down this last week, and it looks like it's settling itself down early on June 6th. Again, a lot of this had to do with these digital asset treasury companies. They've continued to sink alongside the broader market downturn, extending losses that in many cases far exceed those of the cryptocurrencies they were built to own. The combined market value of fully diluted Bitcoin treasury company stocks has fallen to about 72 billion from nearly 134 billion at its most recent peak in early October, according to Artemis data, erasing 62 billion and underscoring how a once hot crypto trade continues to unravel. Here's my problem. Most people are going into crypto to get effing rich. The reason why I started getting cryptocurrency is because it is amazing technology that allows you to benefit from owning it allows people to benefit based off of the infrastructure of whatever the project is. And if you get to own some of that infrastructure, like the nodes or the rigs that create Bitcoin, then you can profit off of that. But more importantly, I think people are not thinking about some of the really great benefits of creating a decentralized financial system. One of my favorite projects is Stellar. In fact, we're working at our Quintanilla Philanthropies group. One of our biggest initiatives is environmentalism and helping protect the environment, right? And so when we think about that, if we look at like real use cases of how we could do that, we could build on the Stellar network. We could build on Stellar. We can actually create maybe a payment system for money getting into other parts of the country for environmental needs a lot faster. That is a real world use case of a development kit that's created by Stellar to increase the transactions of payments. It is a pain in the ass for me to wire. I have to, if I international wire one of our salespeople is in Spain for 3T Warrior Academy. Okay. He lives in Spain. I can't do an international wire to him because it takes him fucking 7 days to get it. I use a US dollar system because he has an account vis-a-vis Wise. I transact that to Wise and he still gets it the next day, right? Money needs to move a lot faster and transactions need to move a lot faster sometimes because we live in a world of speed. In fact, I got Vaclav Smil's new book, Speed. I'm looking at reading that after I finish reading a book from a New York Times checklist that I'm trying to read with Maria. It's a Robert B. Parker's Ace Atkins book that's essentially, what's it called? I can't even remember what it's called, but essentially it's about a bunch of child molesters going around doing some weird stuff, and the Parker is trying to uncover this with his sidekick. And his sidekick's named Maddie. So fantastic, fun book. But point being is there's a book called Speed. We live in a world of speed where transactions have to continuously move faster and faster, and not just transactions from a financial perspective, but transactions in general. Parler, I had a meeting with one of the owners of Parler this last week on behalf of 3T Warrior Academy, just me and him, to talk about how Parler's changed, some of the benefits of Parler, their Optio network, and even the transactions of Parler and the way in which Parler works now is built off of the Severin Technologies blockchain, I believe it is. And so that allows things to be moved faster. It allows it to create coins. Those coins can be used inside of the ecosystem for a specific reason. In Parler's case, is to pay the creators for engagement, I think, inside, or for getting engagement inside of the app, or getting people to sign up for the app, or one of those things. And so go research Parler if you're interested. And again, this is Parler, the app that got taken down off of the stores because people were running to it people were using it. The people believed to do the January 6th riots, I think. But again, go research Parler. I'm not trying to get into that. My point is that the technology can be used for all kinds of things. If we look at Stellar, Wisdom Tree Prime is built off of Stellar. Bridge is built off of Stellar. That's a Stripe company. DTCC, MoneyGram, Circle, Frankel Templeton, Fireblocks uses some of it inside of their safety. PayPal uses it. So again, this is about the transference of money and the transference of transactions. Don't get caught up in all the speculation pieces that go along in crypto. Find the projects that you believe in, where the coins are going to be there for a long time. I don't know if those will make you billionaires, but I know that there will be something that you can buy and sell over periods of time to make profit, because that's what the marketplace is buying something, selling it at a profit, and that's how you make money. So if you're playing in that specific game, these things are going to happen, and these things are definitely going to happen in a 24/7 environment that's super volatile, and it can become more volatile because people can buy into these things with $1 or $10 or $20. And then they buy and they sell them, and so many people are involved with it. It creates this ridiculous amount of volatility, and we're at the first phases of treasury companies and companies utilizing these in traditional stock vehicle or traditional securities vehicles like funds and ETFs. So again, there are going to be these types of things that happen. And the only thing that I would say about this is, again, I believe Bitcoin can be used as a store of value because it can create and its use case is a store of value. So it creates equity in it that we can then borrow against. Like I borrowed against some of my Bitcoin so I could put more into my dividend portfolio that I'm testing. And so when you think of it from that capacity, just be, cognizant of it, that might not always hold up with specific Bitcoin. And it's important for you to do your own research. But it looks like everything's stabilizing in the crypto market right now. And I'm working on a new show called Beyond the Code with myself and some of the individuals from Merlin so that we can talk and dive into some more of these projects from a deeper level rather than just from an investment level. So be on the lookout for that as well. Right. And I don't know what the people over at Citigroup are smoking, but Citigroup economists maintain a lonely call for Fed rate cuts. I think this is important for us to kind of talk about today because of the fact that economists at Citigroup Inc. are maintaining their prediction that the Federal Reserve will cut interest rates 3 times this year. That is fucking ridiculous if the Fed cuts rates 3 times this year. Citi's forecast remains for quarter-point rate cuts by the Fed at each of its last 3 meetings of the year. It was September, October, and December. Only Citi and Goldman Sachs are predicting Fed easing this year, while most other big Wall Street banks have abandoned their forecast for Fed rate cuts in 2026. In fact, if I'm not mistaken, JP Morgan is going to say, or JP Morgan says that there's going to be a rate increase at the end of December. So unswayed by strong U.S. jobs data released Friday, which was yesterday, June 5th, economists at Citigroup are maintaining their increasingly lonely prediction that the Federal Reserve will cut interest rates 3 times this year. Citi's chief U.S. economist Andrew Hollenhorst wrote on Friday that while the Labor Department's May employment report will have Fed officials hawkishly focus on upside risk to inflation rather than downside risk for employment at their June 16th, 17th meeting, he thinks the labor market will soften over the next 3 months. That will lead the market to return to the pricing in the potential for cuts rather than a likelihood of hikes. With this inflation that we're in, there is nothing. The reason why we have a floating effing system in the first place is so that we can tax out money and we can raise interest rates. If we're not doing those specific things, there is no fucking reason for us to have a floating rate a floating rate currency in the United States if we're not going to utilize the mechanisms that we need to. We don't raise taxes on billionaires for some freaking reason, which is weird. We don't raise rates. And when we do raise rates, everybody gets mad at the Fed for raising the effing rates, but that's their responsibility so they can keep calm and have the economy grow at a regular, steady effing rate. If we're not using those mechanisms, then we need to change the entire system in which we're doing. And the reason why I feel that we can't do that is because we have a bad perception of taxes. We have a misunderstanding of how the interest rates work. We have a misunderstanding of how inflation works and how inflation can run rampant, right? And we do not have an economy or a country, I guess, that's all on the same fucking side of trying to move the country forward. And that's why I keep telling people that China's going to outdo us in every fucking possible way because we can't even figure out anything in this country without it being partisan, without it being partisan. Okay. And so again, Citigroup's maintaining that they're going to be decreases this year. I personally think that, the Fed's going to keep everything the same. One thing that I will mention that there is a new Fed chair, but Jerome Powell is still, for some weird reason, sitting on the actual board. So Kevin Warsh is Kevin Warsh. I always think it's Marsh. Warsh is the new Fed chair. There's a board of governors, 7 governors nominated by the U.S. president, confirmed by the Senate. They set banking regulations and help guide monetary policy. Now, Jerome Powell is going to stay on the board, which is a little bit weird. He has the right to do that, but they've never done it, from my understanding. And they're going to decide about the rate of the interest rates. Okay, and so their goal is to maintain interest rates so that we can take money put money into the economy and take money out of the economy. And you want to do that when inflation starts happening. You want to increase interest rates or you want to keep them stable depending on what's happening. The only reason why there would be a specific rate cut is there is immense pressure from the president. And I don't necessarily, the problem with the president is he thinks that he's going to put someone into power and then he's going to be able to control them, like he thought that he could do with Jerome Powell. He put Jerome Powell into the Treasury, into the Fed, and Jerome Powell ended up doing his job correctly and helping us get through the period of time that Jerome Powell was in as the chair. And Biden, because Jerome Powell was doing, I think, a swell job personally, he had added him in for a second-year term in 2022. So now, amongst the biggest Wall Street banks, again, only Citi and Goldman Sachs, which as of last month still forecast a single Fed rate cut in December, are predicting Fed easing this year. While most of the banks that scrapped forecasts for Fed rate cuts in 2026 still expect them in 2027, a growing cohort is looking for the next move to be a hike, particularly since the last Fed policy meeting in April. At the meeting, 3 policymakers opposed inclusion of an existing bias in the statement, which acknowledged risk to both employment and inflation. So JP Morgan Chase & Co. has had a 2027 hike in its forecast since January, and BNP Paribas, based on Friday's data, predicted 3 hikes beginning in December 2026. Citi was among the most accurate Fed forecasters last year, and again is anticipating those 3/4 point rate cuts, while their competitors are not. So again, I mean, in the precedents they've had, their precedence has been that they have been accurate. So doesn't mean they're going to be accurate this time. Now there could be the ability for the board to cut those rates, but it's going to be based off of whatever intense pressure is coming from Trump. The problem is that when some of these predictions were made, we weren't in the middle of a situation where inflation and where gas prices were increasing because of the Strait of Hormuz being specifically closed and the situation going on with Iran. So I do think that it is likely that the Fed is going to cut rates the rest of the year. I don't necessarily know if there will be a hike, but I do believe that they'll keep them stagnant. If there is going to be if there is going to be a hike, I think that it won't be until the end of the year. But again, I guess we will have to wait and see. Thanks for tuning into Markets Radar. I'll be back on Tuesday with the next batch of stories moving the markets. Until then, stay sharp, guys. And as I always say, be thankful, grateful, and kind. We'll talk with you soon. Bye.